Get a check of the business news of the day. Joining us live now is the Chief Investment Officer at the Motley Fool, Scott Phillips. Scott, so we saw the RBA Governor speak at the press club yesterday. Some really interesting stuff there. Warning rate rises aren't over yet. How many are you expecting?
Pete, yeah, look, it probably wasn't a surprise, quite honestly, but it's never good news, is it? You kind of want to believe that maybe it might be okay. I would put my money on one more, mate. I have to say, I think, look, predictions are useless, so don't do anything with this information. But if you're asking me to guess, one more is about what I think is likely. If you look at some of the weakening data across the economy over the last couple of weeks, we've seen inflation down, retail sales pretty flat. We saw the housing lending, let me spit that out, housing lending earlier in the week, really down by about a quarter across some different categories. So there is some sign, I think, that these are having an effect. Whether in a month's time there's enough good news, bad news, good news for the RBA, bad news for the economy, that makes them think maybe they've done enough, that's probably the open question. I do think if we don't get a rate rise next month, we may not see another. But there is still a chance we might get even up to two more if those things bounce back a little bit.
It was really interesting too. I mean, one of the key points that he made yesterday, Scott, wasn't it that he's worried about rental stress and how far rents have gone up. We've got these stats that come out from Domain today suggesting in Sydney that rents have jumped 24% in the past year to an average of $620 a week. And he's basically sent a message to the government, didn't he, Lowe, that, you know, you've got to increase supply to bring this under control, which was interesting.
It really was, and it was an important conversation. A really timely speech, by the way, because that was exactly the story. He talks about the fact there is demand response, which is what he's trying to control now. On the other hand, there's that supply response, you know, in terms of managing how much is available, goods in general, rental properties in particular in this case. Also got that population question, mate, I have to say, with 600,000 immigrants expected over the next 18, 24 months, you kind of look at that and think, if you're running this, if this was a theme park and you were saying, look, it's all pretty full, should we throw some more people inside? You say, well, no, let's just close the gates for a bit. Let's make sure that we don't, push things over capacity. Now, I'm really strongly pro-migration. I think it's a really important part of our national kind of future. But the number of people in the context of a broad population policy, not an immigration policy, but population policy, I think is a really important conversation. Now, neither party wants to have that conversation. We know there's a bit of ratbaggery around that. There's some xenophobia dressed up as other things. So we need to be really careful with this conversation. But purely economically, purely financially, it's great for total aggregate demand. The more people you bring in, the more money is going to be spent. That's good for economic growth. We've talked before, by the way, Michael Pascoe at the press club yesterday asked the governor to say, well, look, aren't we really in a per capita recession if we've got population growing faster than economic growth? Doesn't that suggest a per capita, in other words, a per person recession? The governor sort of said, well, I wouldn't use those words, but all but agreed with that statement. So this is the key challenge, I think, for the economy. We know the aggregate numbers are important, but the per person numbers are even more important when it comes to our standard of living.
Yeah, and look, it doesn't take a week to build a home, it takes a long time. So even if you free up some space, even if state governments, they've got a big role to play in this, even if they do find space and they start building some homes, this takes years. And just looking at that figure at the bottom of our screen there, 24% in the past year, I mean, that's way above inflation. And so that's only going to continue until that stock increases, right?
And it's part of the inflation number, by the way. So as this continues to go up, it feeds into inflation, making that worse and for longer. Remember, too, if we are going to build more properties, what are we going to build it with? Well, more lumber, more steel, more workers. Again, think about supply and demand. But be very active doing that. Not only does it may bring rentals down a little bit, but it pushes construction costs up. It puts more pressure on the demand for those goods and services, which, again, is exactly what we're trying to avoid. Australia has a capacity constraint problem. We're hitting our capacity on pretty much most of these things. We can't get enough lumber, can't get enough steel. Unemployment, we can always put more people to work in some areas, but as the governor said yesterday, we're at a 50-year low for unemployment. So we're at constraints. Again, different things can be done differently. I'm not saying there's no options, but this is the sort of situation where you say, why don't we just build some more stuff that adds to demand?
Well, isn't that the problem, though? But because the construction sector's under the gun at the moment as well.
Yeah. Look, what I will say, by the way, is construction. We've had a couple of construction companies fail in the last couple of weeks.
Yeah.
So there are some puts and takes on construction. Part of that challenge, of course, is the fixed price contracts back to inflation again. If you did a deal 18 months ago and said, I'll build you a house for X dollars, and all of a sudden we've seen these inflation numbers over the last couple of years, they're losing money on these contracts. Unless they can renegotiate, they've also had enough margin in them. There's a lot of builders out there just treading water, trying desperately to get through the current crop. they'll reprice the new contracts, of course, and that'll move around. But yeah, there's a lot going on in this space, and it does seem to me that there's not a lot of coordinated policy. We've talked before about fiscal policy, i.e. government policy, and monetary policy from the RBA, not necessarily walking hand in glove. This does seem another example of exactly that. When you've got the governor trying to say, let's cool demand a little bit, you've got the federal government doing other things like pushing more people into the country. Again, they applied to come. They've been, it's part of it's just a COVID catch-up. But if you're in charge of the supply and demand levers, it would make a little bit more sense, I think, to start pushing those a bit more.